All right, guys, what's going on? Today we're going to be doing something a little different than usual. We're going to be talking about the rise in foreclosures. It's going to be about 2022. So, the article I'm referring to is in reference to February 2022 from Adam Data. So, just to summarize the article, in February, there were a total of 25,833 properties with foreclosure files, which is up 11% month over month from January 2022. They also note that these numbers are up 129% year over year. The year over year isn't really surprising since in 2021, 2020, we had the foreclosure moratorium, so there weren't really any new foreclosures. But what's interesting is the 11% increase in foreclosures from January. Why did this number stand out to me? Because over the past 2 years, home prices have risen so much that homeowners have gained enough equity to pretty much avoid foreclosure. So what does this mean? I believe it means that there are other factors at play here preventing homeowners from paying their mortgage. And what those factors are, I haven't really figured out yet. Now, it is important to note that foreclosure completion numbers actually declined from January to February 2022. The numbers recorded are 2,634 U.S. properties completed foreclosures in February 2022, which is down 45% from January 2022. So at first glance, this might not make a lot of sense, but when you actually sit down and do the math, it most likely means that the number of completed foreclosures in January was actually much higher than the average because the lenders, they may have just been catching up on foreclosures or very serious delinquent loans that were prior to the pandemic moratorium. Now, they're saying that we can expect to see more month-to-month volatility in these numbers, pretty much just as services and the court systems work through and catch up on some of these backlogs from the previous couple of years. Now, with regards to foreclosure starts, they increased monthly in 40 states, adding up to 16,500, which is up 40% from January. So, what does this increase in foreclosures say about the housing market? Well, first of all, it tells us that the protections for homeowners that were put in place during the pandemic, they're starting to wear off. So we can expect to see continuing double-digit increases month over month for the near future. Now, you may not realize this, but there are still a lot of homeowners currently in forbearance. And for many of them, I'm assuming that they're in more of a permanent financial hardship, which may lead to them getting foreclosed on when this forbearance period ends for good. Now, the increase in foreclosures may also indicate that not only the economic recovery, but the employment recovery is not fully complete like a lot of us thought it would be. We lost 20.2 million jobs in April 2020 alone. And that's obviously from the government imposing the wide-ranging lockdowns. And since then, the economy has only added 18.8 million jobs back, which means we are still short pre-pandemic employment levels. So with all that said, the silver lining for our housing market is that January's foreclosure rate remains 40% below the pre-pandemic levels, which is great. However, with the 11% increase in February, now we're only 29% below pre-pandemic levels. And I haven't seen the stats for March yet, but assuming we did another double-digit increase month over month, we may only be at 19% below pre-pandemic levels. And from where I'm sitting, if these foreclosure rates continue to increase double-digit month over month like they have been, and what they're estimating to, we will exceed the pre-pandemic foreclosure rate by May or June. So the real question is, should you buy a foreclosure? and this is a topic for another video, but with the demand of homes exceeding supply by so much, I really don't see any of us getting a foreclosure for a steal like we used to pre-pandemic. It's obviously still possible. I mean, you'd have to get to the homeowner in the pre-foreclosure stage, but if they go to market to sell, then there's a good chance that the price will get bid up to hopefully just market rent, but potentially higher than that. And one more point on this, when banks foreclose, they want to get rid of the property quickly. But the banks know what's going on in this market, so I'm sure they're aware they can get significantly more for the house than what's actually owed on it. So by the time you start looking at REO properties, it might just be too late to get a great deal. So, very interesting article. Let me know what you guys think about this. I'm sure the people who think we're in a bubble are going to argue that the bubble is going to pop now with all this foreclosure stuff happening. But then those of us who think the market is just going to keep going steady, we're going to use this data to show that the market might just slow down, but still increase that 3 to 5% year over year. But regardless of where you stand, drop your thoughts in the comments because I'd love to get some conversations going on this. This is something that we're going to have to be looking at for the next few months, and it's very important. So, stay classy, Massachusetts. I hope you have a phenomenal weekend. And always, I just want to say, thank you.